If Warren Buffett ever decided to make a move into crypto, it wouldn't be about hype, influencers, or quick profits. It would be about something deeper: value, utility, and inevitability. And while the world associates Buffett with traditional stocks and old school finance, his philosophy might just explain exactly what's about to happen to XRP. Because if there's one lesson Buffett has repeated his entire career, it's this: the market is a device for transferring money from the impatient to the patient, and in the case of XRP, patience may soon pay off in ways even the market isn't ready for. Welcome back to Crypto Equation, where we don't chase hype, we break down logic, data, and history to reveal what's really driving the financial future. Warren Buffett built his fortune not by guessing trends, but by understanding systems. He never cared about noise. He cared about fundamentals: assets with moats, utility, and scalability. Now fast forward to today's crypto landscape. Most projects come and go. They promise revolution, then collapse under speculation. But XRP is different because it's not trying to replace the financial system. It's becoming part of it. That's what makes this story so fascinating. If Buffett were to look at XRP through the same lens he used for Coca-Cola, Apple, or American Express, he'd see something incredibly familiar: a product so embedded in infrastructure that one day the world won't function without it. In one of his most famous quotes, Buffett said, "Risk comes from not knowing what you're doing." And that's exactly how 99% of the market treats XRP. They don't study what Ripple is actually building. They don't read the reports, the regulatory filings, the partnerships. They just see price charts and drama. But if you understand what's really happening, the shift to tokenized finance, ISO 2022 integration, global liquidity transformation, the picture becomes crystal clear. XRP isn't a gamble. It's a system upgrade. That's the kind of long-term play Buffett would admire: something boring, essential, and unstoppable. Let's be honest, Buffett doesn't like hype cycles. He famously avoided dot-com stocks in the 1990s because they were overvalued and underbuilt. And when the bubble burst, he was right. But when the dust settled and real value emerged, companies like Amazon and Google, he didn't ignore them. He studied their infrastructure, not their marketing. That's what investors should be doing with XRP. Because beneath the noise, Ripple has quietly built one of the most robust infrastructures in modern finance. Over 70+ countries connected through RippleNet. On-demand liquidity moving billions each quarter. Partnerships with banks, payment providers, and now tokenization custodians. Regulatory clarity after years of legal battles. It's the kind of disciplined foundation that Buffett himself would describe as a moat, a structural advantage that competitors can't easily replicate. Now imagine Buffett's mindset applied to XRP's trajectory. He once said, "Be fearful when others are greedy, and greedy when others are fearful." For years, fear surrounded XRP: lawsuits, delistings, regulatory uncertainty. But while the market panicked, Ripple built. And now, with that clarity emerging, the same asset that was ignored may soon be the cornerstone of the next financial infrastructure. That's how Buffett made his fortune. Not by following noise, but by trusting the math. Let's project forward to 2030. By then, experts expect tokenized real-world assets, stocks, bonds, real estate to exceed $16 trillion. Global banks will no longer send payments through outdated SWIFT systems. They'll move value in seconds using standardized, blockchain-based networks. Ripple's entire framework, XRP Ledger, ODL, CBDC integrations, was built specifically for that world. A world where liquidity doesn't just sit, it moves. Buffett always said, "Never invest in a business you can't understand." If he analyzed Ripple's business model, he'd understand it perfectly. It's just finance, done smarter. It generates efficiency, it saves cost, it scales globally. It's simple, repeatable, and irreplaceable. That's what Buffett looks for. But here's where things get even more interesting. Buffett has always believed in network effects. The idea that once a system reaches critical mass, its growth becomes unstoppable. Think of Visa, think of Apple. Once adoption reaches a tipping point, every new user reinforces the system. XRP is on that same trajectory, quietly connecting banks, fintechs, CBDCs, and liquidity providers into one global mesh of value exchange. Each new integration strengthens the network's utility. It's not about speculation, it's about inevitability. That's why the smartest investors aren't asking if XRP will rise. They're asking when the world will realize it's already happening. Buffett also said, The stock market is designed to transfer money from the active to the patient. And that's exactly what's happening right now in crypto. Impatient traders chase the next meme coin, while institutions quietly accumulate infrastructure. Ripple isn't here to impress retail. It's here to serve banks, corporations, and central banks, the entities that move trillions, not tweets. By 2030, XRP won't be a speculative play. It'll be the invisible lubricant of global finance, powering instant settlement, tokenized transfers, and cross-border liquidity. That's the boring business Buffett always talks about. One that makes money every second of every day because the world can't function without it. Dash dash. Most people can't see that future because they're focused on price. But Buffett never valued assets by today's price, only by their future cash flow and indispensability. He buys what the world will need, not what it already loves. So if Buffett were looking at XRP in 2025, he wouldn't ask, can this go to $10? He'd ask, can the global financial system operate without this in 10 years? And the answer, increasingly, is no. That's why this shocking prediction isn't about Buffett owning XRP. It's about his philosophy describing exactly where XRP is heading. Buffett has always said that the secret to wealth is time, not timing. He built his fortune not by trading every move, but by letting compound value work in silence. And that's the mindset almost no one applies to crypto. Most people treat digital assets like lottery tickets. Buffett treats investments like businesses. He looks for durability, cash flow, need, irreplaceability. If you translate that logic into the blockchain era, what does it look like? It looks like XRP. Because while thousands of coins chase trends, XRP solves a problem that never goes away: the need to move money quickly, cheaply, and globally. And that's not speculation. That's infrastructure. Now think about the world in 2030. The average person will use digital money daily without realizing it. Central bank digital currencies will be embedded in banking apps. Real-world assets will trade as tokens. And financial systems will communicate through ISO 20022, the same standard Ripple integrated long before it became mandatory. Buffett would look at that picture and see what he always sees: the inevitability of efficiency. When something cheaper, faster, and safer exists, markets eventually adopt it, no matter how long it takes. He saw it with railroads. He saw it with insurance. He saw it with cloud computing. And if he were alive a century from now, he'd see it with blockchain liquidity. That's why the smartest investors aren't guessing prices. They're studying mechanics. Dash Buffett's mentor, Benjamin Graham, taught him that value and price are not the same thing. Price is what you pay. Value is what you get. Right now, the market is paying attention only to XRP's price. But the value, the network, the compliance, the corridors, is growing underneath it every quarter. That disconnect is what long-term investors call margin of safety. Buffett always buys assets when their long-term value is obvious, but the market is still confused. That confusion is what creates opportunity. And XRP's confusion phase is exactly where Buffett would start building. Another thing Buffett insists on is management quality. He backs people, not just products. He invests in CEOs who understand discipline, regulation, and brand trust. Now look at Ripple's leadership: Brad Garlinghouse, with a background at Yahoo and decades in tech; Chris Larson, an early fintech pioneer; a board filled with banking veterans and compliance experts. That's not the cast of a speculative startup. That's the lineup of a company planning to last. Buffett has said countless times, "I'd rather buy a great company at a fair price than a fair company at a great price." Ripple fits that mold. But the real Buffett principle at play is compounding. He often reminds investors that compounding only works when you stay invested long enough for results to matter. Most people interrupt it with fear or greed. That's why the average crypto holder sells too early. Ripple's compounding isn't in dividends, it's in adoption. Every corridor added, every CBDC test completed, every exchange relisting adds incremental utility. That utility compounds quietly until one day it becomes exponential. Buffett calls that snowball investing. Small momentum, rolling downhill, growing into something unstoppable. That's exactly how XRP's network effect is forming. By 2030, the snowball could be enormous. Global payment systems fully standardized. Tokenized asset markets trading 24/7. Liquidity bridges running beneath the surface of every major bank. And somewhere inside that plumbing, XRP, not visible to the public, but essential to the function. At that stage, calling XRP a crypto coin will sound as outdated as calling the internet a computer fad. It will simply be the way value moves. Buffett would never chase a chart for that. He'd own the infrastructure that everyone else ends up needing. That's the essence of his forever investing rule. Let's revisit one of his most famous quotes. Our favorite holding period is forever. Why forever? Because once you own something with permanent relevance, you stop caring about cycles. And that's where XRP is heading. Once it becomes the financial standard for settlement and tokenized liquidity, its relevance becomes permanent. That's what investors who sell early don't see. They think they're trading a coin. In reality, they're exiting ownership in a system that will power every future transaction. Buffett is also obsessed with cash flow. He values assets that generate income simply by existing. If he analyzed RippleNet, he'd see recurring usage fees, network volume, and scaling efficiency, all forms of cash flow in a digital context. The network effect will eventually feed itself. As more institutions use Ripple for settlement, ODL liquidity deepens, which lowers costs further, which attracts more users. That loop is compounding utility, a digital version of passive income. That's why Buffett would find XRP's economics fascinating. It's not about trading, it's about earning through function. Now, let's talk about perception. Buffett once warned, you only find out who's been swimming naked when the tide goes out. That applies perfectly to crypto. Every bull run exposes projects built on hype, but assets with real fundamentals survive every tide. XRP has already been through storms, lawsuits, delistings, and skepticism, and it's still standing. That endurance is the hallmark of Buffett-style value, because real moats don't crumble under pressure, they deepen. So, what would Buffett's shocking prediction actually be for 2030? It wouldn't be a price target, it would be a principle that the market will underestimate XRP's role right up until it's indispensable. He'd say that by 2030, investors will stop asking if XRP will succeed and start realizing the system has already been running on it for years. He'd call it the visa of value transfer, quiet, omnipresent, and profitable precisely because nobody notices it anymore. That's the real Buffett prediction, inevitability disguised as boredom. Buffett also teaches emotional discipline. He says markets exist to test your temperament, not your intelligence. And that's exactly what XRP has done for its holders. It's tested conviction through every kind of uncertainty. Those who've stayed are proving what Buffett always preaches, that patience, not genius, is what separates the successful from the forgettable. Because eventually, the market aligns with truth. It always does. By 2030, the truth will be clear. XRP's fundamentals, speed, cost, compliance, and scale, will have outlasted hype cycles and fads. Ripple's network will underpin CBDCs, remittances, and tokenized assets, and institutions will rely on it daily, even if they never mention it publicly. That's the moment Buffett would call the harvest. Years of quiet building, patience, and misunderstanding, finally recognized for what they always were. Inevitable value. So if Warren Buffett were watching this right now, what would he say? He'd probably smile and repeat one of his favorite lines. Someone is sitting in the shade today because someone planted a tree a long time ago. Ripple planted that tree over a decade ago. The shade is coming in 2030. Most won't see it until they're standing under it. If this helped you see the long-term picture, subscribe to Crypto Equation, where we decode crypto, finance, and investing using logic that even Warren Buffett would respect. Because the real shock isn't Buffett's prediction. It's how perfectly his philosophy describes XRP's future. This is Crypto Equation, and I'll see you in the next one.